Welcome. Good morning. Hello. Welcome to the 7th episode of our Know Your Regulator series that we organize in collaboration with the Indian Institute of Corporate Affairs and the Forum of Indian Regulators. I'm Arkaja Singh. I'm a fellow with the Center for Policy Research and a part of our state capacity initiative. And, just a few words about our work on regulation at the Center for Policy Research. We are interested in the legal and policy frameworks and the organizational structures of regulation in the long-term efforts of the Indian state to build up regulatory institutions. We're also interested in the people and the everyday life of regulatory agencies. And we have this Know Your Regulator series that we've been running for some time, where we have the privilege of talking about all our interests with the people who run our regulatory agencies. Through these conversations, we seek to build an understanding of what regulatory agencies really do, what markets and market-based activities they regulate, and what their goals and purpose are. We are very privileged to have Mr. Praveen Kumar, Director General and CEO of the Indian Institute of Corporate Affairs with us here today. IICA is a key partner in our KYR program, and we are very happy Mr. Praveen Kumar is here to provide some introductory remarks. But before I hand over to him, I'll provide a brief introduction to our speakers today. Our special guest in today's talk is Mr. Debasish Panda. He's an officer of the Indian Administrative Service of the 1987 batch. His home state is Orissa. He joined as chairman, Insurance Regulatory and Development Authority of India on 14th March 2022. Prior to joining IRDA, Mr. Panda served as Secretary, Department of Financial Services, Ministry of Finance, Government of India, from where he superannuated on 31st January 2022. Mr. Panda also served as Joint Secretary, Health and Family Welfare, Additional Secretary, and as Special Secretary, Financial Services in the Government of India. Today, he'll be in conversation with Dr. K.P. Krishnan, Dr. Abha Yadav, and Dr. Rohit Chandra. Dr. Krishnan is a former civil servant with a deep interest in regulation. Many of you already know him, and we are very privileged to have him with us now as a colleague and honorary research professor at the Center for Policy Research. Dr. Abha Yadav is an associate professor at IICA, and she is also director of the Forum of Indian Regulators Center at IICA, which is the knowledge and capacity building hub for central and state government regulators. Dr. Rohit Chandra is a visiting fellow at CPR and an assistant professor in the School of Public Policy at IIT Delhi. He works on the political economy of energy, infrastructure, and finance. So with this, I'll hand over now to you, Mr. Praveen Kumar, for a welcome note.
Thank you, Arkaja. Very warm good morning to my dear friend, Mr. Debasish Panda. I think we can't have a better person in charge of IRDA than him. Think of anyone else who could hold that charge in that post. My esteemed senior colleague, Dr. K.P. Krishnan, expert, Dr. Rohit Chandra, Dr. Abha Yadav, Arkaja, and all others who have joined in this session of Know Your Regulator. This Know Your Regulator, as Arkaja already mentioned, is a monthly series where we talk to the chairperson and members of the Indian regulatory agencies. This was started sometime last year, and we have been able to have sessions which are becoming very popular with the chairperson of CERC, chairperson of RERA Punjab, FSSAI, IBBBI, PFRDA. In that same series of this distinguished regulators we are having today with IRDA, which I will term it as one of the oldest new regulators. I mean, this was one of the first regulators which came in the 90s after the economy opened up. It was felt that regulation should be there to correct the market distortions. There's a lot of doubts among normal citizens that what does IRDA do, how do we go if we have a problem, if we have any policy, or if any insurance agency is acting funny, or even if you want a new kind of a product in the market, what we should do. All these questions keep on occurring and people even don't know. Except people who are in the know of things, normal persons don't know. So this is an attempt to bring the regulator close to the people so they understand how to go about it. Because many times we say that insurance policy are being missold and they are not correct things are not conveyed to the policy buyer when the policy is being sold. So this way it will be a good opportunity even for the chairperson IRDA to tell that what actually IRDA means and how does it help in the insurance sector, especially now with even the LIC becoming partly private and perhaps in future may go. So this kind of a building of trust, which will be very useful in future. With that, I don't want to stop between the experts and the regulators.
Mr. Praveen Kumar, could you move a little closer to the mic?
Okay. I won't like to interfere between the regulators and the experts. With my comments, I'll stop here. And again, welcome, hearty welcome, Mr. Panda, Debasish Panda. And I hope this will be an illuminating session for everyone, so the citizens will know actually how we can IRDA does, what IRDA does, and how we can access IRDA for benefiting ourselves. Thank you.
Over to now, we can go right into the panel. So over to Dr. Krishnan, Dr. Rohit, Chandra, Abha. We can now have the panel discussion.
Thank you. Thank you.
Request to all of you to stay close to your mics because we are having some complaints from the audience that the volume is not entirely clear. But let's see if we can fix it now.
Thank you, Arkaja. Very good morning to everybody here. Let me first join Arkaja and Praveen in welcoming Mr. Panda, Chairman IRDA. As Praveen said, given Debashish's experience in the insurance, health, and related sectors, perhaps there is absolutely no one better than him to speak not only about the issues that we have for him in the IRDA related aspects, but also on a bunch of related topics. So Debashish, thanks very much. I'm grateful that you could join us. Let me also take this opportunity to greet Praveen, DG of the Indian Institute of Corporate Affairs, and our partner, sort of co-host in this KYR series. Before I get to the substance, let me also greet my colleagues, Dr. Yadav, Abha Yadav of IICA, Rohit of IIT Delhi, and CPR and Arkaja. Debashish, as Praveen and Arkaja mentioned, the idea of the series is regulation as a form of state intervention and regulators as an organization of the state are both new and different from the conventional interventions that we are used to and the conventional state organizations that we are familiar with. So when we started the series, the idea was both from a pure, let's say, common person perspective, as well as the intelligent reader of, let's say, the pink papers, we should get a sense of issues in the sector and the thoughts and the ideas of the regulator, so that people get to know the instrument of regulation as well as thinking of the regulator on the specific domain. And we've had a series of excellent conversations with many of our colleagues in the regulated space. We launched this with the chairperson of FOIR, Mr. Sahu. At that time, he was also chairman IBBI, but he spoke to us in his capacity as chairperson of FOIR, the Forum of Indian Regulators. So this is the background. And once again, a warm welcome to you. Let me straight away jump into the substance of the discussion. I thought it would be very useful for us as well as the audience to know what was the sort of genesis of IRDAI, the Insurance Regulatory Development Authority of India, we will all sort of recall, in terms of the sectoral regulators, this was a later regulator. SEBI came in the early 90s. IRDA came subsequent to the Malhotra Committee recommendations in the late 90s. It's a sector that across the world has issues on consumer protection. So if you could give us a sense of the historical context, the background of why was the IRDA set up? What are the problems that it is meant to address? Over to you, Debasish. Thank you.
So thank you. Very good morning to all of you. It's a pleasure and privilege to be part of this series of Know Your Regulator, an excellent initiative where the public and the other policy makers or the opinion makers ought to know what the regulator does and what the regulator stands for and what is the mandate of the regulator. So thank you, sir, particularly Mr. Krishnan, my colleague Praveen, and the other distinguished panelists for having me here this morning. Sir, to respond to the question that you made, what was the genesis of IRDA, how it was born, and why did it come up? So if I look at the evolution of the insurance sector in India, we can probably divide them into three distinct phases. The first one being the pre-nationalization era, which was somewhere from 38 to 56, where we saw a large number of small, medium-sized insurance companies operating in the ecosystem with a controller of insurance at the helm. That period witnessed a lot of dissatisfaction amongst the policyholders of not getting the due on time. A lot of liquidations happened, a lot of mergers happened, and that era somehow witnessed that there was no clear regulations to protect the policyholders. Then came between 56 and 2000, which we can term it as the nationalization era, with the LIC being nationalized in 1956 and subsequent to that, around 72, we had the 4+1, 5 non-life companies being nationalized. So that was the ecosystem which operated between that period, where we saw that although the policyholders' interests were protected, but the growth was slow, and there was little choice for the consumers because it was more of a monopoly of 4 or 5 public sector companies which were operating within the country. I think around 2000, with the liberalization, the economy opening up. So that was the time when this Malhotra Committee was set up, as you rightly pointed out. And the Malhotra Committee clearly recommended a series of reforms for the insurance sector. And that was the time when the IRDA was given a shape. And initially it was supposed to be a pure regulatory body, but at some point of time, based on the parliamentary committee recommendations, I think they also assigned the development mandate to the IRDAI. That's how it became Insurance Regulatory Development Authority of India. So if we just look at the era before this liberalization of IRDA came up into existence, I think there were a lot of issues which was concerning the policyholders and also the slow growth of the sector with very limited choice of products, costly products. There was no awareness, dissatisfaction of the customers in terms of the claim settlement. There were a lot of lapsation of policies. Term plans were not being encouraged. And there was also a limited spread of the rural and the welfare-oriented insurance. On the supply side, if you look at, then there was a lack of competition because there are a lot of items which are under tariff. Then there was a lack of market discipline. Professional standards were not there in underwriting and risk management. So all of this were somehow not actually allowing the sector to grow in the manner which was anticipated. The IRDA, with the coming in of the IRDA, I think there was a clear mandate that the IRDA would be ensuring protection of the policyholders and also ensure an orderly growth of the insurance industry. So this era of liberalization also witnessed the re-entry of the private sector along with the public sector. FDI in the insurance sector was opened up and companies started listing during this regime. So we had a number of companies then coming into being. So this is how it has evolved, and therefore that was the need, I would suppose, why the IRDA was thought of, the Malhotra Committee report, and the background where the insurance sector had actually not penetrated in the manner in which every country would look at, because that provides the basic minimum protection to the citizens of the country and the financial security. Alternatively, insurance industry, one should know, also supports the economy in a big way. The assets under management are the ones which pump fuel into the economy by putting this money into productive instruments for growth and development of the country, for promoting trade and commerce of the country, for supporting infra development of the country. So this is, I leave this question here, sir. If there are any supplementary questions, I'm here to answer. Sir.
Thank you. Thank you so much, sir, and a very good morning to all. I think you've set the base very well for us to begin the discussion, sir. And just, as we talk about the insurance sector, and we know, like you've rightly, taken us through the history also, we all know that the insurance sector has a very deep-rooted history in terms of, it being mentioned even in Manusmriti, in Dharma Shastra, Artha Shastra. And in fact, one can trace it till in the British colonial period also in 1818, when the life insurance business in India was established in the form of the Oriental Life Insurance Company in Calcutta. So I think our viewers, our audience who have a deep interest in this sector are aware of this historical perspective also. Today, as you said, insurance sector is hugely contributing to the financials of the country. It is the fastest growing, one of the fastest growing sectors in India. And not only is it a colossal one, it's also growing at a speed of about 15 to 20%. So, we realize the responsibility it sort of, puts on the insurance regulator. In our conversations, as Dr. Krishnan mentioned earlier, we've seen that there is no real standardization of the regulators in the country. So my next question to you sort of would be that, we did see some regulators which have all three elements of a democratic process, which is executive, adjudicatory, and legislative process. What would you say in that context for the Adai? Does it have all of these three elements, and each of these elements would you like to throw more light upon?
Yeah, as I said, that IRDA is a regulatory and a development institutions, and through the statute, some of these powers have been vested, or responsibilities have been vested. If you look at the executive functions, then Section 14 of the IRDA Act clearly casts duty on the authority to regulate, promote, and ensure orderly growth of the insurance and also the reinsurance business. Now, how do we do it? We do it through a host of regulations. We issue directions, we issue circulars, which we call the master circulars, and we also issue guidelines. So through these means, we are able to regulate the industry in an orderly manner, making sure that all the time they are in a position to honor the commitment that they have made to the citizens or to their policyholders. If we look at the other aspect of how do we regulate the insurance industry, that is the supervision mechanism. You have to look at the risk profile of the companies and whether they have been able to maintain the requisite solvency at all points of time, and where the risks are sitting on their balance sheet and how do they mitigate, and all of that are continuously monitored, and they are done either through an off-site mechanism or an on-site examination. And through this, we are trying to ensure the financial soundness of the company and also the market conduct of the company. Now, the IRDA is also being empowered to register and regulate the insurance entities. We no longer call it a license to operate, but we call it a registration. So once they are registered with the IRDA, that is the regulator, then they are free to operate in the market, sell their products, service their clients, and so on. We also do approve the changes in the shareholding, so as to make sure that the risk is not concentrated in the hands of few. We also allow issuance of other forms of capital other than the equity or the shareholders' own money. the appointment, the remuneration of the CEO, and other corporate governance related matters are all handled by the IRDA. In other words, which ensures that we regulate the entities in a proper manner. Now, if you look at the adjudicatory powers, then Section 14(2) of the IRDA Act allows you to adjudicate disputes between the insurers and the intermediaries, or between the intermediaries. It also provides powers to adjudicate and also impose penalties. They're all laid down in the statute. As far as legislative powers are concerned, basically the rules are framed by the government and the regulations are framed by the authority. So in this manner, the executive, the adjudicatory and legislative powers have been delegated or given to the authority to regulate the sector in an orderly manner.
Thank you, sir. In that context, sir, I know that you've sort of told us, but still, would it be possible for you to elucidate the role of the central government, the kind of role that the central government plays, especially being a huge regulator for a huge industry? Is there some kind of a policy framework that comes? Is there a certain ministry that the Adai has to, so those kind of fundamental issues?
See, the central government obviously is the government of the day, determines the policy framework, determines the broad guidelines in which, even the focus of what the government wants. But having said that, and of course, they are in charge of, the statute and any amendments that are required to be made in the statute from time to time, depending on the market needs and the market dynamics or the needs of the citizens. So that those amendments are carried out. Rules are framed by the government. They appoint the chairman and the other members of the authority for functioning. They also are responsible for appointing some of the or the part-time directors also. So all of this is done by the government, and we have mechanisms where we have worked closely with the government, and which we all know as the FSDC is the forum, which is chaired by the Honorable Finance Minister, and all the regulators are part of this forum, and where inter-regulatory issues, or per se, if a regulator has any issue which has to be flagged before the government and all the secretaries of the various concerned ministries, particularly the finance ministry, all part of this committee. So that's the very powerful and important and responsible committee which looks at the issues pertaining to the regulators, and also try and sort out inter-regulatory issues which may be there or which may help in delivering the services in a much better way.
Right, sir. So before I hand over the mic to Dr. Rohit Chandra, my final fundamental question, briefly, if you could touch upon the organizational chart and the organizational structure of Adai for the benefit of our viewers. Thank you. Excuse me, was I audible? Am I audible?
Yes, you are.
Okay, so I did ask you to please elaborate on the organizational structure, sir, of Adai.
Okay. So the organization structure is, we have a very slim and trim structure here. We have the chairman and 5 full-time members, 4 part-time members. We are located here in Hyderabad. Hyderabad is the headquarters for the IICA, and we have 2 regional offices, one in Mumbai and the other one is in Delhi. The number of officers are close to around 250, but we have the flexibility of adding more people. So we have people who are recruited directly from the market at the level of assistant managers, and through an All India competitive examination and through a independent entity agency. And we have officers from the level of assistant managers to the level of executive directors, and they go up in the hierarchy through a mode of writing an examination and also going through an interview. Plus, they get some marks for the qualifications that they acquire during the course of their service in the authority. So in that manner, we have a set of people who have wide-ranging experience, who have qualifications in actuarial sciences. There are qualified chartered accountants, cost accountants. There are people from the legal background, and there are quite a few who have a background of engineering, technology, and also management. So that's we have a very, as I said, not a very big organization, but organization which I feel is right size. But maybe as and when we go along, we do add also more layers of experts, domain experts wherever required. So that's how the IRDA has been functioning all these years.
Thank you, sir. Thank you. Over to you, Dr. Rohit Chandra.
Thank you, Abha, and thank you, Mr. Panda. So continuing kind of some questions on the regulatory methods of IRDAI. We've spoken about what does fair treatment of policyholders look like. So could you please elaborate on how IRDAI fulfills this objective of consumer protection, and what are some of the tools you have at your disposal when doing these things?
I would say that the essence actually lies in first of all, ensuring adequate access, affordability, and fair value of the insurance products to the prospective, policyholders and also the existing policyholders. So this has to be supported by necessary awareness, guidance, and seamless servicing of the claims. So that's the second plank in which you can serve the policyholders' interests. The third would be a 360-degree framework which would include the insurers, which would include the multiple distribution channels that are there to serve the people. Then you have service providers, and then we have certain academic institutions, and then we have some data repositories and a network of ombudsmen. The ombudsman is supposed to deliver speedy grievance of their, redressal of their grievances. So all of this are in position to facilitate access to service the insurance and claim settlement process of the policyholders. We also have something called the Protection of Policyholders Regulation, which was framed in 2017, which is applicable to all the insurers, the distribution channels, the intermediaries, and the other regulated entities and the policyholders. And the whole idea or the objective of this regulation is policyholder-centric governance. That's number one. Fulfillment of the obligation towards the policyholders. That is what you have promised. That has to be fulfilled. Third, we try to ensure the best practices in sales and service of the insurance policies. And in this manner, try and protect the policyholders' interests. Now, we have even asked the insurance companies through this regulation to mandate a board-approved policy, which will include what are the necessary steps they are taking to enhance insurance awareness, what are the service parameters, including the turnaround times for the settlement of claims, then what is the procedure that they have established within their own entities for expeditious resolution of the complaints, and what are the steps that are being taken to prevent mis-selling and unfair business practices. You'll be hearing a lot of issues that there's been mis-selling, there are complaints of mis-selling. So this is something of, again, utmost priority. And then they have also been mandated to display the service parameters and the turnaround times prominently on their website for the benefit of the citizens. Now, certain essential data, we have also prescribed that certain essential data should also be, prescribed in the insurance prospectus, so that upfront a prospective insurance policyholder or the one who's already there is able to visit that and understand the scope of the benefits, the extent of insurance cover that he's entitled to, what are the exclusions, what are the policy conditions, what are the contact details of the insurer in case he or she has to make a correspondence. Then there is a concept of a free look period. For example, I've taken a policy and suddenly I realize, oh God, I'm stuck with something which perhaps doesn't suit me now. So you have a free look policy, which is normally 15 days in case of a physical obtaining of a insurance product. If you have obtained it online, it is 30 days is the free look policy, where the premium completely is refunded, barring only the adjustments will be made for the risk premium or any expenses that have been incurred, like medical tests or the stamp duty. Barring that, everything else is returned to the policyholder within that 15-day period. Should there be a delay, then there is a penal interest of 2% more than the bank rate, which the insurance company has to pay to the policyholders. I mean, I can go on this. If you go
No,
to
that's quite comprehensive, sir. I guess one of the things we're curious about is what kind of complaints make it to the IRDI and its ombudsman. So obviously there's a 30-day period where you're supposed to contact your insurance company, and if they don't respond, then you can escalate to the ombudsman. So what are the most frequent kinds of complaints that make it up to your offices?
The complaints basically would be the settlement amount is less than expected. There could be complaints on mis-selling. There could be complaints on delay in the settlement of the claim. There could be complaint on which they presume is something part of the policy, but they have been excluded. So a host of such issues do come up in terms of complaints which come from the policyholders. But what we have now done is that within the insurance company, we have asked them to designate grievance redressal officer. We are now even toying it with the idea of having an internal ombudsman also within the organization, because a grievance redressal officer will have limited capacity to deal with it, whereas an internal ombudsman perhaps will be given a far more bigger responsibility to settle the claim, taking into account the complaints that the policyholders may have. So IRDA also has set up a portal which is known as the Integrated Grievance Management System. Now, this portal is an interface between the policyholders, the IRDA is in the middle, and then the other entities, largely the insurance companies, and also the intermediaries, also part of this integrated grievance redressal system. Now, it also, all the enrollments are made or the complaints are registered, and then it goes to the insurance company for them to look into it and then take whatever corrective action they feel appropriate that has to be done. And then thereafter, the claim amount, if there is a claim amount which they approve later on, less than what they had actually approved, a larger amount has to be paid, then they do settle the so-called grievance as far as possible, and then it goes back to the customer. Now, this system, we are now again trying to look at. A detailed analysis is being made of the system, and we want to bring in more of data analytics to understand the kind of problems that are arising, the nature of the complaints, and who are the companies, which geography, which region, which is that particular policy. So data analytics is going to help us in identifying the root cause and also take immediate corrective action. Secondly, we are also trying to revamp the IGMS, which we now intend to call IGMS is something which sounds very Greek and Arabic. So the common man should identify with a portal which they can actually recognize and understand. So we would be calling it Bima Bharosa, so that people will have the faith and trust in insurance. So this portal is going to be a more dynamic one, which will take care of the customer's needs in a more time-bound manner. It will also do a kind of taking a feedback from the customer. Currently, we don't have a feedback system. If the complainant is reached and asked what was the level of satisfaction they had in terms of the redressal of grievance, then that also gives us a feedback to further improve the system. So this is something work is on, and I believe that in the next couple of months, we should be having a much more robust grievance redressal system, which will be known as Bima Bharosa.
No, that sounds very comprehensive, sir. Finally, one quick question that who are the key players in the insurance ecosystem who you spend most of your time interacting with?
Well, I mean, all the stakeholders, obviously, the stakeholders would be the insurers, the insured as well, which are the policyholders, the various intermediaries that we have in this ecosystem. I mean, they run into about 40 to 50 lakh, such agents or entities are operating in this ecosystem. So we do interact with all of them periodically and from time to time. And lately, we are trying to make it a more institutionalized arrangement so that these meetings or these interactions happen in a more frequent manner to understand the pain points that the industry may have or the pain points that the distribution system may have, how we can improve, how we can further improvise. And our whole focus and emphasis is on how we reach out to every Indian. We want this country that our society should be a fully insured society. So, I mean, that's something which we are targeting. Now, in order to do that, we are doing a gap analysis. We are trying to find out what the capacity currently we have. How many more companies do we need? What is the kind of capital that is required to be augmented to the existing players? Now, whether the distribution channels are working efficiently, what is their productivity? Do we need to improvise? Do we need to have more technology-based solutions? So all of this are something which is on our drawing board, and we are working on that to speed up our insurance penetration, to reach out to more and more people. Because we are here, we are not only trying to count the insurance reach by way of penetration, but we are also counting by way of the number of policies that we have issued and the number of new policies that we have issued to the our own countrymen. So that is how we are trying to measure as we go forward.
Great, sir. So I'll hand it back to Abha for the next set of questions.
Thank you so much, sir, for the answers to all of Dr. Chandra's questions, which have really demystified a lot of things for us as well as to our listeners. The next segment, as we come halfway through our conversation, almost halfway, I'll be trying to keeping it brief and focusing on the adjudicatory and enforcement aspects of Adai. So here, just to set the context for the conversation ahead, there are the corporate governance guidelines for insurance companies that have been given by Adai. And as regards the insurance sector, the regulatory responsibility to protect the interests of the policyholders demands that insurers have in place good governance practices which maintain solvency, sound long-term investment policy, and there is an assumption of underwriting risks on a prudential basis. Also, we find that with the emergence of insurance companies as part of the entire financial ecosystem, it has added a further dimension for sound corporate governance in the insurance sector. And we at IICA, of course, are very interested in looking at this part of corporate governance, which emphasizes on overall risk management across the structure. So that there is prevention of any kind of financial instability. And the objective of this guideline, as we can understand by the Adai, is to ensure that the structure, responsibilities and functions of board of directors and the management of the insurance company recognizes the expectations of the stakeholders as well as those of the regulator. So these guidelines, please correct me if I'm wrong, but they sort of amplify on certain issues which are covered in the Insurance Act 1938, and also the regulations that are framed thereunder, and they include measures which are additionally considered essential by Adai for adoption by insurers. So in this background, I mean, there's much more where Adai says that the guidelines need to address these major structural elements of corporate governance, which is the governance structure, board of directors, CEO, key management functions, so on and so forth. So in this entire backdrop, sir, on what more aspects of the insurance business do you think the regulatory scrutiny can be exercised, should be exercised, and where would Adai in the present scenario want to focus? Could you give us a broad?
That's an excellent question. In the sense, that is why we are here. So, but having, what you have set the background. See, we have two roles to play. One is the developmental role, where we have to see that insurance penetration grows, insurance density grows, the reach grows, and on the other hand, we have to look at the financial soundness of the companies, the market conduct, which is our regulatory role. So we are trying to balance both and ensure that the sector grows in an orderly manner, and it doesn't really grow in a manner where things could turn from good to bad and bad to worse. So we have to balance and also grow, but then we can't lose sight of the fact that everybody needs insurance. So how do we ensure that reach as well? Now, having said that, regulatory supervision is exercised at all the appropriate levels. Now, how do we do that? The financial soundness through the prudential norms, the valuation of the actuarial liabilities. Then you also, we look at the actuarial liabilities, both existing and future, because you are promising something, I'll give you 10 years, 15 years, 20 years down the line. So how do I account for those actuarial liabilities? Then comes the matching capital requirements. So what is the capital that is required? And then also maintain solvency at all point of time, because you don't know when that risk is going to unfold. Somebody could die, take a policy today and die tomorrow. I still have to honor that. So all of this are factored through our prudential norms, and we try to take care of these aspects at every point of time. Now, how do we do it? Currently, as I said, we have on-site, off-site supervision. We have what you call monitoring and overseeing through various periodical returns and submissions that the insurance entities provide to us. Wherever required, on-site inspections are done with the team of officers from our side. Then we also take regulatory actions wherever required. Wherever a serious concern is observed, then directions are given. Otherwise, advisories are given, show cause notices are issued, imposition of penalties are there. As far as investments are concerned, the assets that they aggregate through the policyholders' money, we also have a set of regulations how they are going to invest that money. Some of it is already built into the statute, and some of it we regulate through the various regulations that we issue. So all of this actually lead us to give us the insight as to how these insurance companies are doing in terms of their investment returns, whether they have sufficient solvency, whether capital is matching with the kind of business that they underwrite. And the other issue that you asked about is regarding the governance issue. Very important actually. What kind of board we have, who are the independent directors, who is the CEO, who are the other key resource, the key management personnel like the CFO, the chief actuarial officer, the chief distribution officer, the chief risk officer. All of them are very critical in trying to take care of the issues that we are concerned or what we have promised the policyholder. So currently, let me tell you, the system in which we are doing is more of a very traditional method of looking at the risk factors and the supervision framework that we have. Now we have very quickly started embarking upon a project of going towards a risk-based supervision framework, which will be enabled by technology, or in other words, you can call it SupTech, supervision technology. Today, technological tools are available. So we have already started working on that. Within the IRDA, we have created a vertical which is working on a mission mode. We are, as we go along, also engaging the industry so that we move hand in hand and be ready with this supervision technology framework, which we call the risk-based supervisory framework. That's one. Second, we are also trying to move away from the solvency or the factor-based method of trying to take care of the risk towards a risk-based capital framework. For example, in simple words, for a risk carrying a risk of 100 rupees, we are asking him to make a provision of 100. For a risk for 150 also, you ask them to provide for 100 rupees. Whereas for 50 also you are asking for 100. So that is not a very optimum way of utilization of the capital. And today there are countries or regulators where there is a risk-based capital regime already in existence. So we are also started this process. We have now a dedicated vertical working on a mission board to move towards the risk-based capital regime. And we have also got the industry on board so that we work in tandem and also build the technological platform also as we go along. So these two major programs have been already launched by us within the IRDA in consultation with the industry and other stakeholders. And I hope that these two things we should be able to do. I think the risk-based supervisory framework, we should be able to do it within 6 to 9 months. And whereas the risk-based capital regime may take maybe around 2 to 3 years time. And that's the estimate that the experts, now the international experts also claim that you cannot do it between, before 2 years or 2 to 3 years. But anyway, we are fast tracking that as well. So with all of this, we are trying to put in place, or we have put in place, a sound governance framework and also sound regulations for the prudential norms that the companies need to follow. And plus, of course, our own supervision, both offsite and on-site periodic returns. All of this give us the insight to what are the corrective actions we need to take, or everything is going fine. So that's how we operate in this ecosystem.
Thank you so much, sir, because I think without my asking, you've thrown light on a very important issue, which is the intersection of digital insurance, the digital side insurance, as well as regulation, because internationally, we find that insurers are pondering on the digital dimension for applying digital techniques to improve their compliance programs, and particularly in areas, also something that we should talk about, including, customer data protection. So I'm happy to know, I think our viewers are also happy to know that Adai is already, focusing on this particular area. With that, sir, we move to the issue of enforcement, and what are the challenges that Adai faces as far as enforcement is concerned, and regulatory enforcement, as well as what do you think are the possible solutions? If we could, if you could highlight for us the issues, first of all, what are those issues, and then the possible solutions to the problem?
I think much of it we have already discussed. Enforcement will only happen if the compliances are not up to the mark.
Right.
You don't get to need to enforce that they comply. So currently, as I said, a lot of the supervision is compliance-based kind of that you have a set of regulations, whether they are complying with them or not. But as I said, the risk-based supervisory framework is a much more potent tool to understand the risks for compliance of other regulations. In fact, also let me clarify and tell you that we have what I see here is that we have a lot of rule-based regulations. With the industry maturing, we have been here for 20 years now, and you really don't need to show a rule for everything that you want to do. So from a rule-based, we want to move towards a principle-based regulation approach. Now, the principle will give the bandwidth to the insurance companies or to the other stakeholders to operate within that framework. So the regulator doesn't need to specify each and everything. For example, until now, any product that the insurance company was to launch required a prior approval of the regulator. So now we have done away with that. Why? Number one, the industry is mature. The industry understands what exactly should be the price based on the actuarial calculations. We have appointed actuaries, which the actuary gets certified by the regulator, and then they are appointed there. We have asked them to have board level policies for the product's certification. So all of this, there will be an internal check and balance. And thereafter, the regulator will obviously monitor how that product is behaving in the market and what is the traction that they are getting, what are the kind of complaints that we are receiving. So that will happen later. So we have given away that. So that gives a wider choice to the consumers because you come up with more innovations. You launch the product on time. Obviously, when it comes to the regulator, it will take time. It ranges somewhere between 3 months, 4 months, 2 months. So why that delay? So we have completely delegated that power for all health products, for all non-life products, excepting a category for the small ticket policyholders. And as far as the life products are concerned, we have given away all the term policy covers. Only for long-term savings product, pension products, we have said that you take a prior approval. But as we go along, we'll further liberalize that. So enforcement is a problem. I'm coming to your question only when you don't comply with the regulations.
Correct.
So as I said, the supervisory framework, risk-based, is going to take care of that problem. Then through technology, also we can do a lot of off-site enforcement and also the monitoring of where the deviation has happened. Then we are also looking at newer tools and technology. From the IGMS website, which we'll now call it the Bima portal, Bima Bharosa, we will get a lot of inputs and feedback that what are the kinds of compliances that are not happening despite the regulations being in place. So we will be able to take correct regulatory actions there also, and also warn and also advise the insurance company. So I think we are gradually moving towards this regime, and I'm sure that with this regime in place, we will find a lot of issues getting sorted out through the help of technology, through the help of data. You talked about data, and insurance today, I would reckon, or I mean, internationally, all of you are experts, would understand that unless we unlock the value of data, we will not be able to price the product correctly.
Right.
So pricing of the product, therefore giving the consumers a better choice, will happen through the unlocking the value of data. Secondly, the processing of claims, and then designing of products which will be more personalized and hyper-personalized as we go along. The millennial population would demand that kind of product. So in order to address that, we have a repository or a transactional data bureau, which is called the IIB, the Insurance Information Bureau. Now, this also is doing something, but perhaps not optimally. So we want to make this body a more professional one, have people with the requisite qualification, experience and background who can deal with data, who can deal with the technology. You need a chief data scientist, you need a chief technology officer, you need a chief executive officer. So we are trying to convert this body into a professional body, and probably it would be led by the industry rather than the regulator. The regulatory will have an oversight over it, but let the industry operate and run the system as a professional one, because ultimately the data is going to be of use to them for underwriting and for claim settlement. And it will be a win-win for the customer also, for the fact that he will get a better price, and it'll be the customer will be the winner. So this is what also we are attempting to do, and hopefully that also the work has already started, and we should see this body also coming up in the next few months or years.
Thank you, sir. My last question for the segment would be, about the professional organizations that Adai regulates, such as the Insurance Association of India. So as we know that, under Section 64A of the Insurance Act 1938, the Insurance Association of India has been established, and its membership, of course, consists of all the insurers who are carrying on business in India. And under Section 64C, there is the establishment of the Independent Life Insurance Council and the General Insurance Council, both of which have, they are bodies that connect the various stakeholders of the respective sectors. It consolidates both these bodies, they consolidate discussions between the government, the regulatory board, and the public. So in short, one can say that these are, sort of the face of the life insurance or the general insurance industry. So how does Adai promote and regulate professional organizations such as the life and general insurance councils, as well as the Insurance Association of India?
Let me just clarify that typically we do not regulate, but there is some kind of an oversight. Otherwise, these are all self-regulatory bodies. Actually, we deal with, the most important one for us is the Institute of Actuaries in India. So the actuarial science is something very critical to the insurance sector, as you all understand. So it is a self-regulatory body, but we do have a representation on its board. And through our representative on that board, we try to bring forth the issues that concern the insurance sector. And if you recall, maybe a few months, years ago, we had a huge shortage of actuaries in the country. In fact, the insurance companies were struggling to find actuaries from the market. But lately, with a series of interventions made through our representative on their board, and also the government has also taken adequate steps, actuarial profession. So today there is a supply. I wouldn't say it is abundant, but there is a reasonable good supply of actuaries in the country. In fact, I'm glad to also inform you that within our own organization, we have a host of young people who joined as engineers or management graduates have now acquired the actuarial qualification. So this profession is getting more and more popular, and a lot of youngsters are finding interest in pursuing the actuarial profession, and which is critical to the insurance sector. So we very closely associate with that body. Then, of course, we do also get associated with the ICAI and the ICSI, the Chartered Accountants and the Company Secretaries professional bodies. Then we have another professional body which is called the ISLA, the Surveyors and Loss Assessors. So they're also, these are basically all self-regulatory bodies, but we do have a presence there so that we make sure that, because they are also critical to the insurance industry. So in that manner, we try and intervene wherever necessary to make those organizations more robust. They are aligned with the current requirements of the market or the profession. As far as the councils are concerned, councils are also, the GI Council and LI Council are very two critical pillars, one taking care of the non-life sector and the other taking care of the life sector. So they are a council which is represented largely by the insurers and the other stakeholders. There are some nominees which the IRDA does make, and there are some which the government makes. So this body is supposed to take up the various issues concerning the industry, take up the various issues concerning the other stakeholders and also the policyholders, and bring to the table of the regulator issues that will help the industry grow even faster, and sort out issues that may be pain points for the industry or the stakeholders or for the policyholders. So these two councils, have also been there for years. But again, what we discover is that, again, there is a lack of professional approach to bring up issues. Lately, we have tried to nudge the executive committee of the councils, the chairman or the chairpersons of the councils, to bring in more experts into that body, partner with good knowledge partners also have on board, so that industry issues not only within the country, also they look at the best international practices elsewhere in the world, and which these councils could deliberate and come up with papers to the regulator on a continuous basis or on a periodic basis, so that we at IRDA are alive to the problems or the issues that they face and take care of them in the manner in which it is required in the larger interest of the sector. So this is how we are actually trying to get the councils also become more vibrant, become more robust, and become more professional, so that what we are doing, it will be only complementing our efforts and also supplementing some of them to take things forward. So the IRD, the councils have already started that process. Only recently I saw the advertisement for a CEO who will get a market-driven salary because somebody very good at it has to come and lead that organization. So I'm sure the winds of change blowing, and I'm sure that times to come you'll see all these organizations becoming much more effective and much more responsive to the needs of the sector and the policymakers.
Thank you so much, sir. Over to Dr. Krishnan for the next segment, please.
Thanks, Abha. And with Debasish talking about effectiveness of organizations, and given that, in CPR, this program itself is part of a larger initiative, which is called the State Capacity Initiative. I thought it's a good segue to get you back to something that Abha had started with, namely, this whole business of regulatory capacity. You've been in the government, long enough. We've all been in the government long enough to know, traditional areas of work being now done differently, plus new areas of work now being done for the first time. For instance, an organization which within itself has legislative, executive, and adjudicatory capabilities is a relatively new development for India. So how does IRDA seriously sort of go about building capacity? Because this is requirements in areas of law, economics, as you said, actuarial sciences, market conditions. So if I may just take one more minute of yours, Debasish, I'm sure you recall, in 1992, when the SEBI Act finally got passed, it's been, it was 4 years in the making. 88 to 92 was a non-statutory SEBI. 92, a decision to establish the statutory SEBI was taken. One of the, I'm told by those people who ran it then, one of the critical decisions that Honorable PM Narasimha Rao and the cabinet took, we will wind up the existing controller of capital issues, because we don't want that culture to spill over to SEBI. And two, even more important, can you locate SEBI in Mumbai and not in Delhi? Because it should be close to the market. You will find greater willingness of market participants, etc., etc. So in this background, just to follow up on Abha's original question on staffing, is there capacity constraints looking ahead that you need to address? B, is location likely to be a problem? It may not be in our hands because some of it is in the statute, but are there ways to get around the capacity question? I'll stop here. Over to you, Debasish.
Sir, very, very nice and interesting question about capacity building. I would reckon that every organization needs some amount of capacity building as we go along, because the market trends change, the new instruments of markets change, the requirements change. And with the advent of technology, I think that's going to be the game changer. So we have to be alive to that, and we need to build that capacity accordingly. However, at IRDAI, sir, I would say that we have a good amount of expertise in finance, actuarial, management, technology, but risk management. But yes, capacity augmentation or capacity development or capacity building has to be a continuous one. We have a series of programs that we have for capacity building by way of training of people both within the country, and now we are proposing to also send people outside the country to bring in whatever domain expertise that they need to acquire. I mean, one, we are making it free for the individuals to acquire any kind of capacity that they or the skill set that they may require. At the same time, we are also trying to mandate some of the trainings which our people here have to undergo. One important capacity building, I said, sir, is about 4 pillars that we are trying to address. One, we are trying to move towards a risk-based supervisory framework. That entails a lot of capacity building. Automatically will happen once we introduce that. The risk-based capital regime again is going to change the paradigm of what we are doing right now in terms of capital conservation or optimal utilization of capacity. Again, capacity building of our human resource will happen. Then moving towards the IFRS or the Ind AS regime is also work on in progress. We have created another vertical, a dedicated one, again working on a mission mode. And the last but not the least is the InsurTech. Today, sir, with insurance technology available, recently I had a privilege of going to Bangalore and meeting more than 200 players from the InsurTech world. And I interacted with them. There were one-day long session which happened, with interactions, with presentations, with roundtable discussions, and all of that. And this ecosystem is raring to go. Here at IRDA, we have already developed something called a regulatory sandbox mechanism, where the proof of a concept is actually being allowed to be tested on the ground. We have found that the regulatory sandbox has certain shortcomings, meaning that only an applicant can apply in 2 cohorts. Here we are now realized that this has to be a continuous process. We are revamping that system. The period for which they were allowed to test their products in the market was only limited to 6 months. We are now proposing to expand that period to even up to 3 years, particularly for live products. So we are going to have a dynamic regulation which will be coming in the next few days. Work is in progress, and the InsurTech players are raring to go. and they are all enthused. So with the insurance technology also coming in, here we have to build our capacity to regulate them in a manner that they ought to do as far as the market conduct is concerned. Lastly, but not the least, sir, we are also looking at the possibility of allowing even smaller players. Sir, if you look at the banking system, we have differentiated players, That's how the penetration of banking has happened in this country, with more than 130 crore accounts today in place. So we are trying to also think of micro insurance players. We are thinking of allowing niche players also to come into this segment. We are also talking of regional entities also to come into this, although it will entail some amendment in the act to allow with a lesser capital also these kind of players can come. All of this happening, I think, will help us in furthering our objective of insurance penetration and reaching out to more and more people. Of course, these players will have to have the technology background, and InsurTech is there to help them in taking to those areas which are still unserved or underserved in the country.
So thank you, Debasish. That's very comprehensive. We have plenty of questions ourselves, but there has also been an enormous amount of audience interest, and we have a series of questions that are lying in the question box. So given that we don't want to delay you beyond the promised time, what I will now request is we will move to the last two questions, the closing questions. So Abha, if you want, go ahead first on consumer protection, and then I will come back to Debasish very briefly. And Rohit, in case there are questions that you have, we'll tie them up with the questions that have come in the question box, which I guess Arkaja will articulate. Abha, over to you on a quick second round question on consumer protection.
I'll be very brief. Thank you, sir. Mr. Panda, sir, Adai has launched for MSME the Bharat Laghu Udyog Suraksha and also the Bharat Sukshma Udyog Suraksha, which I think is quite path-breaking, wherein I believe all insurance companies have also been told to come up with a standard word product for the MSMEs. In this context, and of course, please feel free to sort of broaden our base also regarding the consumer protection issues in the insurance sector, and what additional measures are you thinking of? You did mention the Bima Bharosa, the IGMS, which is great to know. But what one finds is that for the semi-literate insured as well as the illiterate, it's sort of very difficult to reach the ombudsman or the grievance redressal authority. So can you please elaborate on the consumer protection issues and how Adai is looking at those?
See, some of it, as I've already mentioned, are in the stage of discussion and at the formative stage. We are reviewing the existing systems, how to make it more robust, more responsive, more fast, where we can do the root cause analysis, etc., is something where we are working on. How we can use other forms of technology like AI, ML, RPA, robotic process automation, all of that are possible. It's not that something Greek or Latin I'm trying to say, but these are all within the realm of possibilities, which we are trying to incorporate in our scheme of things. And as I said, we are running a hackathon also now from 30th of June after the Bangalore conference with the InsurTech players, and trying to state these kind of problems, how they can give us a solution which will be based on technology. So what I believe that Bima Bharosa portal will be something which will become more vibrant, more robust, more responsive, will take care of a lot of issues. As far as the ombudsman mechanism is concerned, we have already tasked the responsibility to a committee, the Insurance Ombudsman Advisory Committee, where we have got some experts, which is being led by one former ACS Additional Chief Secretary level officer from the All India Services, and some experts within it. So they are already looking at the ombudsman system. We are trying to revamp again whatever necessary changes have to be made in that. Internal ombudsman within the insurance companies is what we are also contemplating. Work is on. So these are the things we are looking at in order to address the policyholders' concerns and protection. We are trying to make the disclosures furthermore in the larger interest of the policyholders. I will not be able to clearly tell you what exactly we are going to do, but as we go along, you will see that a few more changes will come where the policyholders will earn, more sort of information they will have at their command to make a choice of what kind of policies they should buy. Claim servicing, claim settlement is something which we are going to focus on very closely as far as the turnaround times are concerned. All of this will have to be done through a technology platform, let me tell you. It is just not possible what we can do individually or sitting in IRD, what technology can do. So I'm now going to, at IRD, we are all going to mainstream technology. We are going to incentivize adoption of technology in our regulations. We are going to incentivize. You will be very soon, maybe within a month's time, seeing that as well coming out. So all of this is being done, and for us, the center point is the policyholder. We keep that in our frame whatever we frame, and that we will continue to do so. And I think in the next few months, you will be seeing a more robust arrangement as far as the policyholders' grievances are concerned. And we will also try to ensure that as far as possible, that grievances should not arise and try to correct them by nipping it in the bud in terms of changing the policy conditions if that is a problem creator, or taking care of those issues which can be done right from the word go, so that the policies holders do not have a complaint at all. And technologically solution, today if I look at some country, they issue a policy within 90 seconds and they settle a claim within 5 minutes. So how do we move towards that regime? So that is also which we have already started working on. I am not saying that it will happen today, tomorrow, day after tomorrow, but it has to happen and it will happen. This is how we are going to nudge the insurance companies and other stakeholders, and we will also incentivize them so that they get attracted to moving towards that.
Thank you.
Heartening to note, sir. Thank you. Thank you.
Thank you, Debasish. Before I move to the Q&A, we'll have 10-12 minutes for the Q&A. I want to pick something you said in the beginning, and there's also a question that came up here, which is the FSDC. Just again, as a historical context, I'm sure you know the origins of FSDC. FSDC was actually born as a result of ULIP. If you recall, ULIP led to a not so happy situation of regulator A and regulator B locking horns in public, and then the ministry had to step in, and a formal sort of amendment to the law was carried out to give structure to a body that existed earlier that used to be called the High-Level Coordination Committee on Financial and Capital Markets. That used to be chaired by the Governor RBI. And the new body that was introduced in the law is what is now FSDC, chaired by the FM. Now, the reason I'm bringing that up is a few things that you've done. Yesterday's papers report that there is a thinking that life insurers will soon be allowed to market, sell medical insurance products. You spoke about bank assurance. And having been Secretary DFS, I'm sure you saw at close quarters, notwithstanding the boundaries that we may draw, the reality is that the financial sector at one level keeps converging. And as regulators and as policymakers, we keep fighting it because of our territorial issues, some of which comes out of the law. So do you see this coordination mechanism becoming more and more important? And as an insurance regulator, who will necessarily have to work very closely with the securities market regulator, pensions regulator, Reserve Bank of India as the banking regulator, I thought if you could say a few sort of things on your thoughts going forward, broader reform in the sector, the kind of things that you've already initiated, plus the larger question of financial sector reform and regulatory convergence. Thank you.
Sir, I cannot agree more than what you said. Of course, this forum is going to be a very useful and it is going to be a game changer. I mean, there are a host of issues. For example, very simple case in point is the common KYC. I mean, why do we need to reinvent this wheel again and again? The KYC is lying somewhere, all the regulators can use that. So there have been some advances made there, but I think a new mechanism is now being contemplated by the Department of Revenue to build a eKYC Setu. If I have the Aadhaar number, so the eKYC Setu will be a bridge between me as a customer and the UPI as the repository of that information. So the eKYC is done. So something work is going on. The CERSAI is another repository which has all the data, but there is some element of obstacle in terms of, or rather, I would say concern is under the PMLA Act, where the last user of the CKYC data will still have to update the information with regard to the residential address, etc. Actually amounts to redoing the whole exercise once again. So that is a bit of a concern which we will try and address in the next FSDC meeting. So, but however, I think with the advent of technology and with these kinds of new technologies coming in, we should be able to take care of the problems that the customer, whether he buys a financial product or a banking product or an insurance product. So this forum is going to be important, and I'm sure all of us will raise important issues which concerns the common citizens. That was the first point, sir, which the other one I've forgotten what the second question which you raised was with regard to
the reform that
yes, sir. Yes. Sir, as I said, sir, as far as the insurance sector, we want to move from the rule-based to principle-based. That's one. The product filing we have already delegated. We are looking at some of the other small things that the regulator still is doing can be delegated to the insurance companies. We are looking at mainstreaming technology into our scheme of things. Risk-based capital regime, risk-based supervisory framework, Ind AS, IFRS. These are some of the new reforms that we are initiating and we are trying to take it forward. We are also looking at value-added services to be incorporated in the scheme of things in insurance. Now, what do I mean by value-added services is that, for example, I take a health cover. Now, a young person, a millennial population, if you look at them, age 30, 35, you would say, why should I buy a health cover? I'm not going to the hospital in the next 10 years, 15 years. So that really doesn't really attract them to come into the fold of insurance. So what can the insurance companies offer them by way of some value addition? Can they offer them a yoga membership? Can they offer them a gym membership? Can they allow them to go for a checkup, annual checkup? Can they offer ambulance services to their parents who are living in some remote corner of the country? Can they provide the nursing services? So all of this can come within the bucket of value-added services. Now, if you question why can't they do it now, probably we don't have very clear provisions within the framework of the law, so we need to carve out value-added services. Secondly, if they do along with value-added, along with their insurance product, then a lot of capital will be required because the same solvency norms will apply to them. So we want to carve out so that they can probably, if they can set up a joint venture or a subsidiary, charge a fee for that rather than charging a premium and offer those services, then more and more people will be attracted to buying these kind of insurance products. Similarly, I can go on to motor, I can go on to other kinds of, today ride insurance can be allowed. So for example, I want to go to the Himalayas for a week for a trekking, I can buy an insurance product. I've planned my travel abroad and the plane gets cancelled. So automatically the trigger should come from through AI ML and I should get my plane. So these are all the things which are already knocking at the doors of the insurance companies and they are also ready to go. So we are going to provide that platform for them so that it is a win-win for the policyholders and the customers.
Thank you. Thank you. That is very comprehensive and interesting that you are actually attempting to do what ideally the word insurance should be, namely try and cover any risk. So as societies move ahead, the nature of risk changes, a whole bunch of new risks emerge. So very happy to hear your thinking on this. Rohit, now do you want to use the balance 7-8 minutes to articulate some of the audience questions? And if you can quickly articulate them so that we get to hear Mr. Panda, and then Arkaja can formally close at 12. Over to you, Rohit.
Right. So one of our audience questions is, what are some of the major disruptions that you are envisaging in the insurance industry? And one of the disruptions I think we've all seen in the last 5-7 years is the rise of direct-to-consumer online insurance sales, right? So historically, insurance in India has worked along the agent model. We're moving to a slightly different world, which includes all of the digital trends that you have spoken about. What do you think the future of insurance sales looks like? Is it going to move increasingly to this online world? And what role do you imagine agents will have in the system? Is that likely to shrink?
To answer your question, I would say the first and foremost, technology is going to be the disruptor. I mean, I have no role. It will automatically disrupt the operation. And everybody has to embrace technology, adopt technology sooner or later. So instead of delaying that, we are nudging the insurance companies to come up, new entities straight away to come up with an insurance-backed technology platform. They don't need to create one. They can co-create, they can partner, or they can collaborate. The players are already there. So I find lately, during my interactions since I have joined this setup, a large number of players who are, in fact, wanting to come and set up an insurance company are coming with a technology solution. I found one very interesting solution for crop insurance. It's a parametric kind of insurance based on technology which they want to operate. And they want to operate in the ecosystem other than the PMFBY. So they're saying PMFBY is one bucket, but we are looking at the other kinds of crops. Similarly, for health insurance, for the OPD expenses, that is the outpatient charges. Now, there is generally an apprehension that there could be a lot of frauds. But with technology solution, there are a couple of players who have already filed their applications who want to set up this kind of products for the health sector. So the major disruption would be from the technology. And technology will be the enabler, and technology can help us reach thousands of people, and the traditional agency network will allow me to only reach out to 2 or 4 persons in a day. So we have to recognize that. But having said that, probably we still need the agency network. We still need some of the traditional channels, not all. But we are again nudging them that they should also go into the technology mode. Why can't an agent go with a tab or a laptop or a smartphone and capture the complete digital data and do the complete transaction online? More and more digital players are now coming, standalone digital insurance companies. Niche players are also started filing their application and showing interest. So I think as we go along, there will be many players where they will be backed with technology, they will be backed with end-to-end solutions, they will be coming up with solutions which will be competing with each other in terms of what will be my turnaround time for settlement of it. So this is what I would reckon will be the major disruptor, and also the biggest enabler also, in order to reach out to millions, and also the customer satisfaction at the end. 2 important points that which I thought were not covered is that what will be the key focus areas? One will be that our attempt should be that every life in this country is insured, meaning that nobody in this country should die without a life insurance. So again, to reach out, all this technology will be there. Then property insurance. Today we have a large segment of the population who are at the bottom of the pyramid. Now they cannot afford a property insurance cover. So how do we come up with something which is affordable, accessible? So that is also something which we are working on. Particularly bottom of the pyramid, lower income segments, and also those who are calamity prone. We are seeing large number of cyclones, floods, flash floods coming. So how do we take care of them? Some work is on to address that issue. Then the last but not the least is the micro, small, and the medium-sized enterprises. How the businesses can be covered. Today there is so much of potential in covering business risks. So that is also which we are working with, and hopefully we will also come up with some solutions to those issues. So we are constantly engaging with the industry. We have a bi-monthly meeting now institutionalized where these issues will be discussed and taken forward with the insurance companies and other stakeholders. We are having an open house every month, 15th of every month. There will be an open house. Anybody can walk in. The stakeholders, largely the insurance companies and the intermediaries. So these kind of institutional arrangements have also been made within the IRDAI. So that's how we are looking at the disruptions and how to take care of things.
And one last very quick question, sir, which is that what do you think is an appropriate normative endpoint for balance between public sector and private sector insurance? So life is about 2/3 public, 1/3 private. General and health is about 50-50 at this point. Is there an endpoint you have in mind where maybe in a decade we should end up?
No, not at all. I think the market is so huge, and the innovations that happen are so large, and so much of scope. So there is plenty of room both for the private and the public to be operating in the system. So therefore, I mean, for IRDA, we are completely agnostic whether it is public or private. We want more players, more robust players, more capital with them, so they are able to underwrite more and more. New players, the entry we have made it absolutely seamless now. Between two board meetings, we want them. Now we are nudging them to come up with your final submission so that we are able to give you the registration certificate to operate. So in the last 1.5 months, we have more than I think about 12 applicants who want to start up a new entity for insurance in India.
And one of our final audience questions from Rishika is regarding IRDA's financial self-reliance, right? So one of the problems that many regulators have is how do they fund themselves? IRDAI has presumably become fully financially self-reliant at this point.
Rishika had two questions. Just read out the second one also. They're not exactly linked, but you can just read them both out. Okay, yeah. And then so Rishika has a few more questions in this direction. I mean, the first one is IRDA's financial self-reliance. The second is the creation of risk profiles. Is this something which IRDA plans for, especially at the individual level or at the firm level? And then finally, do you have pre-identified factors in mind for risk-based supervision mechanisms, which you had mentioned earlier?
Yes, all three what Rishika has mentioned are correct. Yes, financially is not a problem. We actually don't need so much of money, but whatever we have is good enough. We want to put that money to good use. So that's what we are doing. Second question regarding the risk profile. Yes, the risk profile of each of the entities is something which we closely watch. And as I said, the risk-based supervisory framework and the risk-based capital regime are going to be again game changers in better supervision and in optimizing the use of capital. And the third question was, what was the third one you mentioned?
I think you've mentioned the risk profile and the supervision mechanism, so that's fine.
Yeah.
Thank you very much, sir. Arkaja, to you for the closing remarks.
Thank you. Thanks to all of you, Mr. Panda and all our panelists. This was, fantastic. And it was, thank you for going so deep and, so deep and so in depth. It was just fantastic. I have, one last, sorry. I have one last.
How to minimize these kinds of interruptions in Zoom?
I'm really sorry.
I think we need an insurance product for this.
I'm really sorry about this one, sir. But yeah, so I had one last closing thought. This was, we didn't spend so much time this time talking about the procedural aspects or the kind of lawyerliness of insurance regulation. Regulator's job has, there's a kind of underlying kind of, the sort of ideas about procedural fairness and consultation and all of that, which obviously, in an everyday life of the regulator, really are part of what you do and are part of the way in which the agency is designed and structured. And, as I close, I was wondering if you had a few closing thoughts about this balance between, dealing with the market and dealing with the commercial aspects of the market and the kind of lawyerliness of, some regulatory work is more lawyerly than others. But I was wondering if you had some thoughts about that.
Well, I think, I have no confusion that, I have a regulatory role, I have a developmental role. having just stepped out from the government, I do understand the thought process in the government and how the government functions. So I think we are absolutely comfortable in terms of trying to balance all of this, the government on one hand, the public expectations on the other, the industry expectations, the other stakeholders, meaning the intermediaries, the professional organizations that are operating in this ecosystem. And so all we have to do is, my role here or our role here is to be a big facilitator. So apart from keeping a tab on each of these issues, but be a facilitator and growth, how we can grow. 15-20% CAGR or even more is what I'm going to now engage with the industry. How our insurance penetration should touch the world average in the next 4 to 5 years, and then how we need to touch the G7 average. So that is what we are having, these kind of aspirational now goals and targets. And putting more robust frameworks in place as far as the prudential norms are concerned is also work which is underway, and as we go along we have to continuously work on that to be ahead of the others. So, and then the FSDC mechanism is another very potent platform for us to sort out a lot of issues which are interregulatory. So, and on in all, for the insurance sector, I think it is a sector which has tremendous potential, a huge market, and so I'm sure that more and more investors are looking at this area. I'm finding a lot of queries, interests coming. A lot of people are meeting also to find out how fast they can get their approval and how quickly they can set up. I said, if you come today, yesterday, you can take the application. So that's the kind of facilitation we are going to do. And I'm sure that the policyholders will get a better deal as we go along in terms of more technology-aided tools with them available, better pricing, better underwriting, better claim servicing and processing. So all of that will happen as we go along. So I'm sure we are in for good times. Thank you very much.
Thank you. That was a fantastic note to end on. Thank you, Mr. Panda, Mr. Praveen Kumar, and our fantastic panelists, Dr. Krishnan, Abha, Rohit. Thank you all. And
Thank you, sir. Thank you all.
thank you. Bye-bye.
Thank you.
Thanks a lot. Thank you.
Praveen,
Thank you very much.
Vanakkam in Tamil.
Vanakkam, vanakkam.
Thank you, Praveen.
Marubadi paakalam. Marubadi paakalam.
Thank you.
Okay, Debasish, bye. Nice to see you.